Good morning, everybody. We're glad you're here today. We want to welcome you to JRBT Tax Talks. This is a series of informational talks we're doing for our clients. I'm Brian Bivona. I'm the head of the tax group here at JRBT, and I work a lot in the area of financial institutions as well as a lot of small business taxation. And with me today is Kraig Fields.
Hi, Kraig Fields, and tax shareholder with JRBT as well. And as I was thinking last night about this, put together that Brian and I have been doing this together over 80 years. And I'm not sure there's been more exciting from our client perspective than this on the PPP loans and the forgiveness now.
Yeah, I would have to agree with that. And the PPP loans came out and they have a provision in there where you can get forgiveness for a substantial portion of your loan for payments of payroll, rent, utilities, and mortgage interest, and which seems simple enough, but when you talk about it, there's a lot of different issues with that. And so everybody's been talking for weeks now about how all these things are going to be calculated and what really qualifies and what's really included. And so finally this past week, the SBA came out with their forgiveness application form. I think it came out late on Friday, along with some instructions and guidance on what to put in there and how to make some of these calculations. And so the good news is we've gotten some clarity on some things. And so the form is it's a simple one-page form. It's got 11 lines. It's double-spaced. You add up the 4 qualifying categories. You make a reduction for if you had pay cuts and if you had FTE cuts, and you're done. Pretty easy, right, Kraig?
Not exactly. My immediate reaction to this when it came out, I looked at it and I thought, oh my goodness, could they have made it any more complicated? I mean, that one-page form looks pretty simple, but you've got instructions to it, you've got worksheets to it, you've got another form that's attached to it, all with instructions, and the detailed information that's going to be required in these calculations is just unbelievable.
Yeah. So one of the big things, the biggest factor in all of this is your payroll. And the law provided that you can get forgiven payroll that's paid and incurred in the 8 weeks after you get your loan. And that brings up a whole bunch of questions. The part of the problem is that not everybody has payroll periods that are on the same times, and some are going to fit awkwardly in this 8 week period. And there's been concern that maybe you don't get 8 weeks worth of payroll forgiven, even though you might actually incur and pay that. In this, we got some very helpful guidance as well as some options that may be really useful for clients. You want to kind of tell us how
so
those
basically they added some flexibility with regards to the definition of the 8-week test period. Typically it's going to be starting with the date of funding. That's what we all thought it was going to be, and that 8-week time period from that point forward. But as it relates to the payroll, they put in this alternate date that we're going to be able to use, and basically it's going to be to make sure that we get at least 8 weeks of payroll in this calculation. So it could start a few days later when that first payroll ends after getting your loan funding, and that would be your start date.
Yeah, there's a lot of calculations that are going to need to be done on this, and it's, at first blush it seems like some of this ought to be easy, but there's calculations that are going to have to be done on an employee-by-employee basis. They're going to have to be done over various different payroll periods. What do clients need to be looking at right now to get ready to produce the information required for this?
In regards to some of the payroll information that's going to be provided, so it's not just your current payroll during this 8-week time period that they're requiring. We're going to look back to 2 other possible periods and trying to determine the FTEs and the average wage that's being paid during that time period. And so you're going to be looking at lots of payroll information and trying to mine that data from either your third-party payroll provider or trying to get that information, if you do your own payroll, trying to pull that information out of your payroll system. it's going to be a tedious task trying to gather all the information for all these various time periods that are going to be required in the calculations.
Yeah, I think if you've got 3 or 4 employees and everybody makes a nice even amount every week, and the hours are pretty much set every week, and there's not too many of them, this may not be too bad a process. But if you have a decent size workforce, and sometimes people work overtime, or sometimes people work less than a 40-hour week, people come and go, it gets way more complicated, because you have to figure out if you have any employees that are deemed to have had a pay cut in these 2 periods, and so you're going to have to look at what you paid each employee in each covered period here. And then you're going to have to look at how many FTEs you had in each pay period. And if you've got employees that are working overtime sometimes and not other times, it gets really very complicated.
Yeah, the schedule requires that you put each employee you have during each one of these periods down, including the last 4 digits of Social Security number, what their pay was during that time period. So it's not just getting your payroll during the 8 weeks that we kind of thought. We're going to have to go through back to these other 2 periods to try to determine this, if there was any pay cuts or if there was any FTE cuts. And so you're gathering information for each employee. If you got 2 or 3, it's not a big deal. If you've got 100 employees, you're writing 100 employees down and their pay during these 3 different periods to try to make these calculations.
Yeah, and they give you some latitude in what pay periods you pick to look at your history of to be able to extract the data from your system to be able to decide what period you want to choose. And so you may need to be doing these calculations at very different dates. And so what you want to try to do is look at your system now to see what's going to be the easiest way to extract this data. If you can get it moved into an Excel period with employee breakdowns, with gross pay, with hours for each person, so that you can make these FTE and payroll by employee calculations easily. So it's a little early probably for most people to try to do the calculations of the forgivable amount, but it's not too early to try to build the structure to get this data. And it really is going to be complicated for a lot of people, and and there's still some unanswered questions about all of this as well. We're hoping for some more guidance on some of it.
They gave some clarification with regards to what are going to be eligible expenses. The 4 broad categories that Brian mentioned a minute ago, and your payroll cost and your rent and utilities, your interest on mortgage, and your utilities. We've talked about payroll a little bit, specific payroll, but there's other items that go into the payroll cost calculation. Your employer paid retirement plan, the employer portion paid of the retirement plan, and the employer paid portion of the medical insurance. So as you're gathering your stuff on the payroll, one thing that we noticed many times, the biggest number of questions I've had is with regards to payroll. Is it my net paychecks plus what got withheld from the employees' paychecks? Is it what's on the Medicare wage on the W-3 form, et cetera? And so it is the gross wages. If you pay an employee $1,000 and you withhold $250 for FICA, Medicare, FIT, medical insurance, 401k deferrals, whatever it might be, and it's $750, it's the $1,000 that you're getting to count in your payroll cost. A question comes up on the retirement plan, Brian, with regards to, okay, so is it just the retirement that's accrued during that 8-week time period that we get? Is it, if we're funding a discretionary profit sharing plan during that time period, is that an eligible expense? What are your thoughts?
Yeah, so with profit sharing plans, it's unusual in that at the end of 2019, for most people, a profit sharing contribution really isn't fixed. The employer can decide all the way up until the due date of his tax return, including extensions, the next year on how much he wants to put in. And he's got until that time to pay it. And so you might not know today what last year's contribution is. So can you deduct last year's contribution if you fund it now? Can you deduct next year's contribution if you fund it now? A lot of discussion about whether or not you can do that. Well, what I think is good news is in the application it says any retirement plan contributions, the employer portion, that is paid in the 8-week period qualifies as forgivable. That would leave a lot of discretion then, theoretically almost potentially a couple of years worth of contributions, as long as you pay them in that period, could be deductible. We're waiting to see if there's any more guidance on that, but the way it reads right now, it seems to be very borrower favorable, any employer contribution paid in the period, as well as being simple.
Yeah, we're going to be waiting some clarification. As Brian and I went through this, there were several things that we talked about that we came to a different conclusion on, and so we're hoping that there will be further clarification at SBA on some of these questions that we have. So let's move off payroll costs. Let's move into some other things. Interest on covered mortgage. Anything interesting that came out with regards to this? We all knew that was interest on a mortgage on a building, but it says perhaps on loans on personal property as well. What does that entail?
Yeah, it has a definitional section, and mortgages refers to mortgage interest on real or personal property. I don't normally think of a mortgage on my car, but the way they define it, interest on any business loan secured by real or personal property that was in place on February 15th of this year is going to qualify. And so that would include equipment loans, which include car loans. If you've got a line of credit and you've pledged your inventory and your accounts receivable against it. Inventory is tangible personal property, accounts receivable or intangible personal property. Both are personal property, and so under a literal definition here, interest on your line of credit seems like it ought to qualify because it's a business loan in place February 15th, secured by personal property.
Important to note, it's just interest, it's not the payment. So principal does not count, so it's just the interest that's on these loans.
And it specifically excludes any prepaid interest.
Correct. Let's move to the next thing, rent or lease payments. Again, we knew this was going to be office rent, but it also includes, we think, leases on personal property as well. So perhaps car leases, obviously your storage, building rentals, copier leases perhaps. All these are leases on personal property. So I think all those are going to qualify.
You're in the construction business and you go out and lease a piece of equipment for a week or two for a job. That probably is personal property rent. Probably qualifies.
I agree. Utility expense. So anything new there? I mean, we all knew it was going to be electric, gas, water, sewer, whatever. For sure it's going to include telephones, cell phones, internet, cables. They threw one new thing in there that kind of surprised me as I read it, transportation.
Yeah, that's the entire guidance, the word transportation. I'm not sure what that is. There's everyone's definition of what that might include is probably going to be a little different, and so that's something I hope they give us a little more guidance on, because it seems one of the most vague things that they've put in here.
Right.
It could be a pretty broad definition depending on how you want to look at it. But
so the other thing they came out with is on the forms. It's basically broken down to the actual calculation form itself, which is a one-page form. There's a Schedule A. There's a Schedule A worksheet. All these have directions on them. They're pretty complicated. But it also, let's talk about documentation. What kind of documentation is going to be required for these expenses, eligible expenses?
Yeah, for the payroll portion of it, you need to have your payroll register showing who you're paying and how much. You need to have the bank records showing that you actually paid the payroll, or if you've got a third-party provider, something from them showing what was paid. For things like utilities, you're going to need the bills as well as bank records proving that you paid it. For rent, you're going to need your rental contract and bank statements proving you paid it. For all of these, you're going to need some sort of proof of payment. For a number of these, it may be you may also need invoices. And then they also indicate that they want to see payroll tax returns for the covered period, which is a little bit odd in that it's an 8-week period that's forgivable. The Form 941 is a quarterly form, and so it's going to have about 13 weeks worth of stuff in it. And it's possible if you got your loan later than the 1st of May or so, it's possible that the 8-week period includes a period in July, which is in the 3rd quarter, and so you might end up needing to provide 2 941s. And then you're also going to need to be able to provide copies of your Texas Workforce Commission reports, partially because that's going to document the state unemployment tax paid, which is forgivable. And it also provides employee detail on who got paid how much during the period. So there is really a lot of documentation that's going to be required on this, and I said earlier about looking at your system to be sure you can get the data out of it and how you're going to do it. You need to also be working on your documentation system and getting all of these things appropriately put together so that you can provide all this data to your banker with the forgiveness application when you go to do that.
We're coming to the close of the session, but as we narrow down a few questions that continue to come from clients. Brian, the business rent and lease agreement, it requires a copy of the lease agreement. What if it's a owner-occupied building that's got a different entity that owns the building, operations are over here, and they've never formalized the rent, but they've continued to pay the same amount for the last 3 or 4 years? Are those lease payments going to be eligible for the forgiveness if there's not a hard written copy of the lease agreement?
Yeah, I don't know that I've seen any documentation on that. Clearly, there's an ongoing relationship there that was in place February 15th, and oral contracts are contracts.
Exactly.
But whether or not that's actually allowable, it's hard to say at this point.
I agree. I don't know. We think they should. There's a box on there about $2 million. A lot of questions I've had in the last several weeks with regards to all this publicity that came out in Wall Street about having to return the money, and so when I marked the box certifying that I needed the funds, what's the latest on that with regards to SBA?
Yeah, the SBA came out with some clarification on that. The certification that you made was when you got your loan was that you needed, because of uncertainties due to the virus, you needed these funds to support operations. Pretty vague statement, but it means different things to different people. And then they backpedaled a little bit and said that people really need to think about whether or not they needed this, and then they have until now May 18th to return the money if you feel the certification was in error. They came out with an announcement a couple of weeks ago that as long as your loan is less than $2 million, you will be deemed to have met your due diligence requirements with respect to that certification, because businesses of that size have less access to capital and liquidity than bigger businesses do. So most businesses that with loans below that should, I think, be in the clear there. But I don't think there's any guarantees. But I think in most cases that should be okay. One
of the other interesting items is the documentation requirement is that we've got to retain it for 6 years. That's even longer than we typically retain tax returns, and so all this documentation that's going on to this form, the application originally, the forgiveness application, and all the documentation, you're going to have to keep records for a long time on that, up to 6 years.
So we're going to wrap up there. I want to mention a couple of things. This is informational for everybody. This doesn't take the place of advice specific to your situation. And if you've got questions, related to your specific situation, you ought to talk to your JRBT tax advisor to be sure of how this applies to you specifically. And the information here is current as of right now. And the SBA is putting stuff out every single week, sometimes multiple times per week, and sometimes it conflicts with what came out before. So, you know, these things are probably going to change again, and so just keep that in mind.
So thanks for joining us today on the JRBT Tax Talk. We look forward to seeing you on the next JRBT Tax Talk. We hope you found this informative and helpful.